Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here on Sunday, July the 11th, 2021 for a Forex trading and cryptocurrency analysis of the following week ahead for July 11th through the 16th. Alright, before we get into it, we want to show you our disclaimer. Just to remind you that this is for illustrative and educational purposes only. Okay, so, and now we're going to put up one last little thing real quick before we get into our analysis. If you have not done so already, please subscribe to our YouTube or Twitch channel on Forex Trading Unlocked, and also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in Kindle and also in paperback versions. So, alright, with that being said, we're going to get to our live action screen. Okay, our live action screen actually has the forex-trading-unlock.com website up. And remember, while we're going through this video, if you have any questions or comments about any markets, feel free to leave something on the chat on Twitch or also on YouTube. We'll be watching these chat boxes while we're going through the analysis today. Alright, so we have, once again, the forex-trading-unlock.com website pulled up, and from our market analysis tab we have the workstation tab already made up. Alright, so as we stream down here, we can see we have the numbers for the week ahead. If you go to our website, you can go through this on your own. Definitely key numbers to watch out for this week will be the oil numbers on Wednesday, as well as the unemployment claims on Thursday. So the dollar index gave us something interesting to look at to end last week and to start off this new week. We came off a higher move high, and then we traded lower, with basically having not much action going on the week, net over net, just slightly lower. Currently, this market is in a uptrend, has been since the end of May. We're making higher move highs and higher move lows. So no matter what, you have to look at it in the sense that this is in an uptrend, and if you are going to sell it, you are going in a counter trend trade, just to be mindful of that. Alright, so as far as, let's say that this is now going to become a very good resistance area, and let's say we do have a short-term correction brewing here. As we look into some of our other currencies, especially some of the majors, it looks like we will have a bounce with the dollar getting a little bit hit as we start the week ahead. So just be mindful of that, and we will get into the signals as we get into these individual currency cross rates. So once again, we have the dollar index looking for a correction down towards this 91.19 area to 90.79, somewhere around this little area. Not like we're going to see this over a couple sessions, but it wouldn't be unheard of to have this happen over the next week or so, especially if there's anything that becomes very negative to the dollar as far as numbers ahead that will be released over the next few days. And that's also for other currencies as well. As far as the cross rates, don't just look at the U.S. markets, look at for the EU especially, and also in Japan as well. It's going to be very crucial over the next week and a half actually. Alright, so now that we've looked at the dollar index, let's look at the euro-US dollar. Remember that we still have a few, hey, what's happening? We got the Gamer Allen. What's going on, man? How you doing? Thanks for tuning in. If you got any questions about any markets, feel free to ask. So, euro-US dollar has not opened yet. As you can see, it looks like a reverse chart of the dollar index. That's because it's the biggest component of the dollar index. So very interesting what's panning out. The one thing you have to note is that we are coming off of a lower move low after a lower move high. So it's very critical that the euro confirms its strength and takes out this high from last week around $1.1896. If we do so, then we have a very good chance of continuing buying momentum for the next week or so and make a shot up to 120.24, even with maybe 120.80 being the extreme, somewhere up in this area right here. Now, overall, this market is definitely in a short-term bear market since the end of May right here, making lower move lows and lower move highs. So we do have to take out this $1.1896 to confirm short-term strength, because then we would have a lower move low followed by a higher move high, which would at least take us off the bearish campaign and put us in a neutral posture for at least a little while. I would say for at least probably 3 to 5 trading days, perhaps even maybe just a little bit more. So somewhere between a week and a week and a half of trading. Now, just because we see dollar weakness against the euro, it doesn't mean the dollar is very, very weak. It just means right now we're looking at a short-term potential correction. Now, as far as signals here, we do have a buy signal here that was triggered on Thursday. This right here is a bullish engulfing line buy signal. If you read the book High Probable Japanese Candlestick Patterns, like I mentioned earlier, it highlights how we like to trade it and how we incorporate it into our methodologies. And you can check it out once again on paperback and Kindle version. So, but if you don't want to do that, we do have a good target zone here for you. Good old 50% rule from this low, from this high all the way back here when this downside correction began at the end of May, puts us up at the 50% marker at $1.2024 with the 0.618 coming in around $1.2080. This would be a good area. You can see how it kind of got bobbled around here before. When it was rallying up back in the early spring, late spring rather. And now here, as we come into this potential rally, this would make a good area of resistance to probably give a little bit of trouble for the euro US dollar, especially if this is currently just going to be a bullish correction. So right now we are not looking at this as a bull market for the euro or euro strength. There's other things that we would look at to confirm something like that, and right now all we are looking at is temporary dollar weakness, which could turn on a dime. So this is not a big deal. Remember, we're not looking for any major correction or push against the dollar. We're just looking for a little bit of a reaction after having been trending lower for a month and a half. So it's not out of the ordinary to pull off something like that. All right, so we have our targets, the upside, our risk level for you aggressive bulls here going for the contrary trade would be the low from back on Thursday of around $1.1782. I would risk a few pips below that for your stops. So as far as like what are you looking for as far as risk reward here, you're looking at basically a 1 basis handle move to get to, let's see, 118.70. So you'd be looking for about a 1.5 to a full $2 as far as reward to risk ratio versus the $1. So not a bad, especially once you get towards this 120.80 target. Should we get there, that's a very, very good level once again as far as your reward to risk ratio for what we would be looking for. Now, if we fail and take out new lows here below $1.1782, look out below, because that would be new or move lows locking in the longer term trend for the euro US dollar. So that's something you want to be very mindful as we move forward going into the next few trading days. And remember, the markets don't open up for another hour and a half or so. We are right now at 3:13 Chicago time. The Asian markets will be coming online very, very soon. All right, let's look at the British pound US dollar. All right, British pound US dollar, we have a big upside move that occurred on Friday. For those of you that are British pound traders, you know that this market can definitely take off on a dime, going very, very fast to the upside or downside. It definitely, especially on a shortened holiday week like it was last week with a lot of people on vacation, it wouldn't surprise me that the algos really triggered off a lot of stops in the marketplace last week to end the week, the trading week. So will we have follow through? I think it's a very, very good opportunity for us to see follow through over the next few sessions. One being is that we did settle and just pierce a higher move high after a higher move low. We have divergence in the European currencies no matter what, even though the pound and the euro seem to have strength versus the dollar right now. This is the one that looks like it's trying to make a turn. Is it likely that this will continue to go up to the upside? I think so. I think that you're going to have a little bit of trouble here around this $1.39, basically a $1.40 even area. $1.40 half, I think will be the extreme, especially if it rockets up there in a short amount of time. So if it goes over the next few days, it's going to have a lot of trouble because of this downward sloping resistance line. But trading above that, especially if we get above $1.4053 and the long-term bull is back. Remember that the British pound US dollar is only in a short-term bear market over the past week, month and a half. Overall, this thing's been a raging bull versus the dollar for over 14 months. So that's something you want to be very, very mindful of and pay attention to when it comes to being short-sighted with the pound US dollar. So the bearish trend may be over, and we may be looking for an explosive move to the upside. And that doesn't mean that the euro is going to have an explosive move to the upside over the longer term. The euro may not have quite as much of an advantage over the dollar as the pound. In fact, we may see the pound US dollar continue to rally over the next 6 months, with the euro US dollar going basically sideways to lower, I think, over the next few months. A lot of it has to do with energy policy, trade, and a bunch of other things that are not hacked out with the EU. So we'll see how things manifest. These are our targets right here. Just be mindful of any trading, though, that falls below this $37.41, which would confirm lower move lows. That would be also locking in the short-term trend, looking to continue more selling pressure as the pound US dollar falls back on its lows. Is this likely to happen? Probably not, especially with the current environment. I think the next few days we're most likely going to see a trend higher than lower, or digest. I really don't think you're going to see it get down below this $37.13. But just use caution. Remember, just like how it bounced here, look at how radically this market came back up, absorbed it, traded higher for a few days, and then boom, fell back. This could just be making a lower move high in the grand scheme of things before it comes back and makes new lows. So just be mindful of the fact that this is an extreme area, and with this downward sloping resistance, it's likely that it's going to most likely run out of gas here around $1.40 even before the bears start to really pounce on this market again. We'll see. First things first, let's get to the first target and see how it's reacting at that time. All right, now US dollar Swissy. Here's a good one for you. This one sold off in a big way as well, making lower move lows after a lower move high, and confirming that it really wants to correct down towards this 91 cent area, maybe even down to a 90.60 area here. So not like there's a huge amount of room to the downside, but it would be a good area to test support a little bit more before we get either some digestion or we bounce back and start to get a rally again. I would say that most likely what we're going to see over the next probably week and a half to 2 weeks is the US dollar Swiss will be under pressure, fall into this zone. I don't really expect it to fall below this 90.60 area here. Not that it couldn't happen. Now, should it do so, that would mean the dollar is probably under a lot of pressure with the other currencies, which could happen. If all of a sudden there's really a big follow-through move in the pound, especially you see it getting back to multi-week highs, and if the euro US dollar explodes through our price targets, then that would change our outlook, and then we would probably see the US dollar Swiss fall below this 90.60 level and even get back down towards this 90 cents or 89.5, putting these past lows from a month and a half ago in jeopardy. So we'll have to monitor that trade and see how that goes. US dollar, oops, that's not the right symbol. US dollar JPY, here we go. US dollar JPY has something interesting going on here for you folks. We have the sell signal, this bearish engulfing line sell signal. Once again, a high probable Japanese candlestick pattern. Oops, we lost our arrow. Put this on a little bit of a pivot. There we go. Okay, so we have this bearish engulfing line sell signal that was triggered a week ago. We came down on Thursday and touched our first downside target of 109.56. We still have 109.06 as pretty much the buffering extreme for a corrective move lower. Notice that the trend that has been mildly rallying, making higher move highs and higher move lows, definitely came and made a lower move low into some key support area here. Did break this channel where it's been a pretty decent slope. This isn't too extreme to maintain a rally right here over the past month, 2 months right now. Overall, the trend is a bull. We are viewing this only as a corrective slide. Even if the US dollar, especially even if the US dollar falls to the euro and the pound over the next few weeks, it is likely that we will see a snapback and a big rally in the US dollar yen. So we're looking at this as more of a rally to buy. This is a Harami buy signal right here. It's very weak. We need to have follow through. If we get a good closing market to the upside, especially if it takes out the open from Thursday, where we had this down day here to set this low on our first downside target, that would be a very good indication that we're going to go higher. So we'll see how things manifest over the next 24 hours as we head into the first trading day of the of the new trading week. So remember, it is summertime markets, and the holiday week is over. People are coming back from vacations or on vacation, so markets may be a little bit of thin and a little bit jittery. I think you're going to have a lot more algos driving and kicking the market around than anything else. So you pick your points well, and definitely make sure you weigh your risks. As far as being a bear here, I think because of what's going on here with this buy signal, and since we tagged the first target already, I would say if you're short, be very cautious or lower your stops, because it's likely that's going to start to go to the upside. I think this trade is over to the downside. Does not mean that we're not going to probe lower move lows yet for a little bit, which we could. We could still ride support and then go sideways for a little bit. Anything is possible. But like I said, especially with the dollar under pressure, with the euro, the pound, and the Swiss, I think it's very likely that you're going to see the US dollar yen get a bounce. Usually there's an inverse relationship between dollar strength and weakness with those different currencies and the Japanese yen. And there's some other factors as well that probably would lay credence to a stronger US dollar than a weaker yen. But yet we could still get down towards this 108, 107 half area and find good support. It would be a solid value area before we start to maybe just go sideways and set a big range for the next 6 months to a year, because that could very likely happen, especially if the economic pace and numbers don't start to show some really good expansion of earnings and other numbers across the globe, especially if we have more lockdowns going on in Australia, which is happening. If they don't start to lighten the load there, I think it's going to impact the yen as well as even the dollar for strength and weakness. So speaking of that, since we have that little segue, let's go into the Australian dollar, US dollar. We're going to be at the cryptocurrencies soon, guys, but let's finish 3 more Forex currency crosses, and then we'll get to talking about what's been going on over the weekend with the cryptos. So Australian dollar, US dollar made a lower move low on Friday, but sold positive on the day. As far as upside targets, we're looking for at least a little follow through up to the 75.06 to 78.28 area, somewhere in here. If this is just a short-term bounce, it's likely we'll see some consolidation in this area. If it is not, then we might see a run up towards the 75.99 where this past lower move high was. Overall, this market is in a corrective state. There's a lot of fundamental and technical reasons why the Australian dollar has more reasons to be weak than find any strength. The lower move lows and lower move highs continue to confirm a downward bearish trend. So the 75.99, basically 76 even level, is crucial. Above there, we look to challenge 76.5 up to 77.09. I don't think that's going to happen. I think this downward sloping resistance band is going to chop it up and keep it basically contained at 76.5 should we take out this last high. So if we have a new high, a higher move high after a lower move low in this market, I wouldn't get too crazy about it becoming a bull. I would look at it more as just a consolidation time or ready for a little pause before the next big sell-off, where I think there's definitely opportunities to ride a bearish trade down for the Australian dollar, US dollar for quite some time. I'm looking at my time frame actually as being a bear right now for this market is 3 to 6 months minimal, with upwards of maybe 12 to 18 months where you'll see the dollar really not necessarily accelerate a slide, but continue to maintain a longer term trend to the downside. Whether or not this happens or not remains to be seen, but right now the way the current environment is, both technical and fundamental, and that's the biggest thing, is the fundamentals are really helping to push that. If you look at the Australian dollar versus other currency crosses, you'll see what I'm talking about. It's weak versus a whole bunch of other currencies, so every time you see a spike with the dollar strength versus any of these other currencies that are stronger than the Aussie, it's going to help pound the Australian dollar, so be very mindful of that. Just to give you kind of an idea, we'll show you how the New Zealand dollar, US dollar, where this market actually double bottomed, whereas the Australian dollar made a lower move low on Friday. We have this piercing line right here where we have a double bottom. We've been trading basically chopping around in this range now for the past month, and the key is if this double bottom holds, then most likely we're going to make a run for the 71.07. Are we going to break out to the upside? That's the key thing. By attrition, we have this downward sloping resistance line that we're going to pass through no matter what sometime over the next few days, unless the market trends lower. We had support back here. If you go back on this chart, this area was support here. It was a big breakout area to the upside over here. And then you can see how after trading up here and consolidating, boom, it tries to sell off. And it bounces. It bounces really well. And it also finds resistance kind of right where this did here before it broke out to the upside. Fails again here, chops around, boom. This is a low, same tick here. This low here and this low here on both of these days. This is a true double bottom to the tick, or to the pip actually, for the New Zealand dollar. Does that mean that it's strong and it's going to start rallying in a big way? Probably not. But I think that as far as in that trading zone, hey, Spicy Sai, nice to see you, man. If you've got any questions, don't be afraid to ask about any of these currencies that we're talking about, or anyone you want us to look at, by the way. So once again, New Zealand dollar, US dollar made a legitimate double bottom here over the past few weeks. And to the actual pip, so we're going to key off of this 69.22 area right here. Trading above here has us looking to challenge this downward sloping resistance line. Should we take this out? We're looking for a challenge of 71.07 here and higher move highs. If we get above here, are we looking for a major rally? No, not at all, but just by the 50% rule, if we follow this right here, well, 50% just puts us right at the breakout zone. So that would make it a nice key area to look for a little acceleration of buying momentum. And then we have the 0.618 area right there. So break out to the upside, fall into heavy resistance, which this was support over here, and see if this really truly contains the trade. Excuse me. If it doesn't, and we do start to inch above this, which could happen, then we're going to have a nice trend to the upside. But right now, remember, New Zealand dollar, US dollar has been basically in a neutral trade for the past 4 months, leaning towards bearish tendencies. Could we lean towards the upside right now? It's possible. Now, notice how this made a double bottom and the Australian dollar made a lower move low. It's most likely, even when the New Zealand dollar sells off, it's not going to sell off in tandem with the Australian dollar so much as it has over the past, especially year to a few months. I believe that it definitely has broken away from that, and that as far as even as a trade zone, that you're going to see more strength in the New Zealand dollar than you will in the Aussie, especially when it comes to dollars. So you may see the Australian dollar, US dollar tanking, making lower move lows consistently over the next few months, while the New Zealand dollar may drift and may even rally against the US dollar. So just be mindful of that. But right now we do have a short-term bottom. Obviously, if we take out the 69.22 area, then you have a new low confirmed, and the bear market, also bearish trend confirmed also. So be mindful of that. So as far as being long, I would trade against that as your risk level. Anything, but so it's actually kind of a low risk buy here, because you know exactly if it falls below here, you're in trouble. You want to be out of the trade. And should we actually take out these highs right here, you have a good chance to hold on to this trade and still get a nice little rally up towards the 71.65, maybe even back up to the 72.5 area. But this would be something that's going to take about probably 2 weeks to 3 weeks to manifest. Now let's go to the US dollar Canada. This is very interesting what's going on here. A sell signal occurred on Friday, a bearish engulfing line. We are looking for a correction down to this 122.99 area. That would come right into our upward sloping support line, maintaining this current bullish correction that we are looking at. Now, the market is overall a bear. It's only been in a bullish correction for the past month and a half, and it's only been slight. It rounded out a bottom and then basically exploded up to the upside over the past few weeks. This could be the extreme. This downward sloping resistance line is the line that goes all the way back to March of 2020. So we came out of this. We broke out to the upside, had a little trouble, bobbled around it. Now by attrition, we're above it. It wouldn't be out of the ordinary for us to come down to $1.22.99, then $1.22.30. If we do that, we're riding this trend line that we could fall back under that's holding the longer term trend intact. So this, remember when we first saw this break out to the upside and we took out this rounded bottom, we've been viewing this as an upside correction already for weeks. Upside correction it is, and until it really proves like it's up to $1.27, $1.28, $1.30, which would even then we would be like, yeah, it's in a bull market, that's for sure in the short run, but even still the long-term trend not very good looking for the US dollar Canada. So we like the short side. The nice thing is, you know, your risk is the high from last Thursday. I trade using the this spot right here, so $1.2590, a few pips above that. That's your risk, with 122.99 down to 122.30 being your downside targets. So right now you have about 150 pip risk to make, what is it? This would be about just over 200 pips right here. So not quite 2 to 1, but this is only on a short-term basis. If this overall trend really is resuming, then look out below, baby. This is going to get way below $1.22, because $1.20 will be in jeopardy with us going down into the teens, meaning very bearish pressure. So this is something that, regardless, even if the dollar has strength versus all the other currencies in the world, I'd be careful with U.S. dollar strength with the Canadian dollar, especially because until we get things hashed out as far as with the oil trade, and then also with Canada, which right now the current U.S. administration and the Canadian administration are not getting along, oddly enough. So this is going to impact the currency for the next few months for sure, unless there is a breaking news about some sort of major agreements as far as trade and a bunch of other things between our borders and our countries. So now let's go into the cryptocurrency market. Remember that there's little remnants of fireworks. Someone is blowing off some fireworks there, folks. So we have BTCUSD very quiet, winding its coil. This is what gets dangerous when you have especially a market with as much volume and volatility as this. Look at how it's just narrowing its coil. That looks like it's ready to explode one way or the other. If you take this, we're wedging right here. And then we take this, and we're wedging right here. So we're just riding this line right here. So what are we going to do? Do we have any signs? We have no signals or signs about anything. There's a lot of news about the crypto space. A lot of it's been negative over the past few weeks. Is that keeping things in this zone where Bitcoin's going nowhere? I don't know about that. I think it's kind of a upside a little bit, downside a little bit area. As far as Bitcoin, I think you just found really fair value for right now. You're not willing to see many people sell it below, obviously, 33,000-ish. And you're not finding many people that want to buy it above 33,000. So I think you're finding a happy price here as far as stability for Bitcoin in the short run. We'll see what happens, but right now we are trending completely sideways. It's a flat line. We got to wait for a breakout. As far as prices, I would use this high here at around 36,800, and I would use this low down here at 28,000. Definitely below 28,000, this market, besides confirming being in a continued bear trend, that really puts it into some dangerous territory where you might see a lot of unwinding with a lot of shaky people, especially the ones that are have taken a lot of heat already to begin with, especially if you bought it up around 60, 58,000, 50,000. Once it gets down to 25,000, people might be just like, I don't care what happens to it, I'm not losing it all, you know. So, and that's where I would be very cautious. You might see a lot of selling once again coming into there. But who knows, you may see a lot of buying coming into that area as well. So, but right now we are looking at big sideways for BTCUSD. Very quiet weekend. XMR, USD, Monero. We like the technology for this one. This one's widening its coil as well, but this one looks like it really does want to go break out to the upside. I think that there's a likelihood, especially because the technology here has at least some decent long-term potentials to be maintained and used over the course of, I would say, the next like 3 to 5 years, 10 years and on. I don't know. Technology changes so fast, and especially in this space, I'm sure that whatever crypto and stuff, however things are growing right now, and even moving forward into the short-term future, 10 years from now, you're going to see technology which will have already not just doubled but changed on 5 times over already. So or for at least 4.5, yeah, almost 5 times over. So who can imagine what digital technology is going to be like in that space just in 10 years? So will these platforms still be good? Who knows? They may be completely obsolete, or they may morph into something else. That's another thing too. So we'll see. With the whole quantum computing coming in, it makes things kind of hard to tell. But for processing, I like this. There is value here. So whether or not there's a chart breakout or not, I believe that you could see Monero, especially over the next 6 months to 12 months, definitely get back up towards this 400 to 480 level. As far as getting above 500, I think you need a really big rally in the crypto space, and then things start to come into where certain technology, where is the long-term value. So I would be careful, especially if you're long from here for a longer-term perspective. Once you get towards those areas, take some profits, take your money out, and then let the rest ride and see what happens, because you may find yourself in a situation where, especially with all these, once the technology becomes either obsolete or whatever, in that kind of a category or instance, you're going to go from wherever you're trading, whether it's 200 or 20,000, to below $2 in a heartbeat. So that's the one thing you have to be mindful when it comes to some of these. But short term, next 3 to 5 years, regardless of what happens in the crypto space, I think that there's an investment here. ETHUSD, there's all kinds of theories on Ethereum, that's for sure. This one, I do believe in the short run, the technology is golden and it has a longevity. Does that mean that it's going to last 20, 50, 20 years, 30 years, 40 years, 50 years? Who knows? It may. It may not. It may not last 5 months, so we'll see. But right now, this one definitely has technology also, that there's a lot of other new blockchain and altcoin tokens out there that function in a way that helps to keep transfer payments and all kinds of other things mediated, and cost controls down and what have you, where excuse me, it lends value to the Ethereum network and Ethereum in itself. So where some of these other coins may find value, it's going to boost and hold the value of Ethereum. For it to go back up to its high of $4,500, not outside of the realm of possibility. Does it have a chance of making higher move highs before Bitcoin does? I think so. I think that it wouldn't take a big rally in Bitcoin to get Ether coin back up to 3,000, let alone 3,500. Right now we are coming off of lower move lows. Short run, we're making higher move highs and higher move lows, but it's flatlining the past few days. So I think the weekend trade, because it's so slow with the big crypto space, it's suffering the same thing. All right, so now let's look at the DOGEUSD. We all know that everyone's watching Doge. This one's winding its coil, and this one, I don't know. As far as I look at this as a gambling meme stock here, it's a pump and dump. My biggest problem with this is not the fact that it's just another altcoin or whatever. It's just the technology. I don't believe there's a sustainability factor for Dogecoin. I know there's now the mini Doge, whatever. I would use a lot of caution when it comes to these. I think they're more scam, pump and dump, because the technology is just not embraceable. The likelihood of us having this technology really be used in the long run with Doge is very unlikely. It's super unlikely. And I just don't really believe that you're going to have an opportunity to see this thing hold any value, say, 12 months, 18 months down the line. Does that mean that we wouldn't see a big rally over the course of the next 2 weeks, the next 3 months? Absolutely. We could see this thing at $100 or $200 in no time. But I, like I said, would use a lot of caution when it comes to this Dogecoin. The fact that they even have billboards out there advertising to invest in Dogecoin, which you would never do for any certified or viable investment. You just don't advertise on billboards. That's not how things are marketed and done in a, not even just a regulated financial space, but as far as real business, it does not work at all. It just does not work, and that's a bad sign right there. So I don't know if any of you out there have seen any of these things, but it is something to be very mindful as you you know, check out what's going on in the crypto space, let alone invest in it. And if you do have a big investment in this, especially around 20 cents to 30 cents, once you get to 40, 50 cents, if you can take your profits and get all your original money back and then have whatever your profits are, let that roll, I think that would be the way to play it. I mean, maybe the thing goes to $1 million a coin, who knows, and you're like, oh my God, think about what I'd be giving up. But once again, I think this is more likely a pump and dump thing, and the odds are you're going to be more happy taking your profits out, taking your original money out at the very least, and then letting it roll, because if it collapses, at least you don't lose your money, you know, and it would be a shame to be wrapped up in that kind of a thing. So I don't think there's a lot of whales holding this one up. I think it's more of a meme, social media run up, and who knows, we'll see how it happens. But right now things are very quiet in the crypto space, and things are winding down, and this is one where I just don't see, especially when you start to see advertisements like that they're reaching for this one. It's where you have people that are so upside down in it. I think you have a lot of people that literally are long this from 40 cents to 70 cents, and when I mean long, I mean long. I think that the whales out there really made a fortune and a killing off of this stuff, just because of the sheer numbers of what people are dropping, anywhere from 50 to hundreds of thousands of dollars, and that was all between 40 and 65 cents for sure. And where are we now? We're at 21 cents and barely holding, you know. So I think that's because they're not liquidating, for one. Why would they? They just bury themselves. But then there's also no one buying. There's no fresh buying. Even the kids don't seem to be buying it. So like I said, you have billboards trying to pump it up. That's just not a good way to look at things. So Euro US dollar, remember where we started off. This is where we do have some interesting things. We have not come back online yet. We do have, let's see, do we have any questions on YouTube? We don't. So any of you guys that are watching on YouTube, we appreciate you tuning in. Don't forget to like this video, leave some comments. If you don't feel like entering on the chat right now, when we do see the comments, we will get back to them, we'll answer them. And also we'll incorporate them into our next video if there's something that's of interest to that we think for everybody, or you just want us to talk about in our next video. So also on Twitch, do the same thing. Please like and pass on our videos, and share our station with your friends. If you have any questions, don't forget to send us a message. We look at all kinds of markets. We look at the futures, stocks, options, and everything else too. So everything is a function of some currency, no matter what, and other markets dictate currency movement as well. So especially even like ETFs and other things like that. So if you have any questions, currency related or derivative related, don't feel shy about asking them. We have no problem looking into these and going over them with you live while we're doing our webinars and via the chat and what have you. So anyhow, that leaves us with the end of our presentation for today. And just remember once again to like our videos, and if you haven't done so already, subscribe to our YouTube channel, Forex Trading Unlocked, or on Twitch, our Forex Trading Unlocked channel there on Twitch as well. Check out on Twitch or on our YouTube channel. Go bounce around our channel, and you can see about other things we have going on our website and what have you, and other information for the Forex industry. And definitely read the book, High Probable Japanese Candlestick Patterns. If you're an Amazon Prime member, you can read it for free. So they have something, I guess, with the Kindles that you, because of your fee, you're automatically, whatever, every month you can read unlimited. So you can read the book. You don't have to buy it then. I'd prefer if you buy the paperback, but whatever, paperback, Kindle, check it out on Prime. At least read it, get some good information on for your trading. I promise you that, especially the chapter on money management, it's worth 1,000 times the price of the book. So it will save you so much money in the future as you move on with your trading business. Remember, trading is a business. It is not a pastime, a hobby, or it is not gambling either. If it is, you're doing it wrong. So you have a good night. Thank you very much, everybody. Good luck in your trading this week, and we will see you soon.